Introduction of Financial Market. In this video, you will learn what is financial market, the participants of financial market, centralized exchanges, OTC markets, types of financial markets, and Forex. First, let's address the question, what is a financial market? Put simply, it's a platform where individuals and institutions come together to buy and sell financial assets. These assets can range from stocks and bonds to currencies, commodities, and derivatives. The financial market acts as a facilitator, bringing buyers and sellers together to trade these assets. Some people are motivated to trade because they expect to gain a profit on their investment. We call them speculators. Speculators try to anticipate price movements and trade to make a profit by buying low and selling high. Some other people are motivated to trade in order to manage their risk. We call them hedgers. Hedgers trade in order to protect an asset they already have, like the farmer who sells his crop before the harvest season. Financial trading all over the world takes place, either through a regulated centralized exchange or over-the-counter. A centralized exchange is a financial market where all orders are routed through a single central platform. Examples include the New York Stock Exchange, the London Stock Exchange, and the Tokyo Stock Exchange. In centralized exchanges, trading takes place in a regulated and standardized environment, with all trades going through a clearinghouse. This provides greater transparency and reduces the risk of counterparty default. OTC markets, on the other hand, are less regulated and offer greater flexibility in terms of contract terms and pricing. OTC, over-the-counter markets, are decentralized markets, made up of networks of different dealers who compete to link buyers to sellers. In an over-the-counter market, dealers act as market makers by quoting prices at which they will buy and sell a security or currency. In addition, financial markets are also categorized based on the type of security traded, such as the foreign exchange or Forex market, where you can buy and sell currencies like the euro and the dollar. The equity or stock market, where you can buy and sell shares of companies like Nike, Apple, Tesla. The commodities market, where you can buy and sell commodities like grains, oil, gold, coffee. The bond or fixed income market, where you can lend money to governments or corporations. The derivatives market, where you can trade financial contracts that obtain their value from an underlying asset like the above four. Next, let's delve into a detailed introduction of these financial markets. The Forex market is a decentralized or over-the-counter OTC market, where currencies from different countries are bought and sold. This means that trading in the Forex market takes place through a network of banks, brokers, and other financial institutions rather than a centralized exchange. It is the largest financial market in the world, with an average daily trading volume of around $6 trillion. The Forex market is open 24 hours a day, 5 days a week, from Sunday evening to Friday night. Due to the high trading volumes, the Forex market is highly liquid, meaning that traders can buy and sell currencies quickly and at any time. Compared to other financial markets, the transaction costs in the Forex market are relatively low. The equity market, often referred to as the share market, is simply the place where shares or stocks are traded. Companies sell shares as a way of raising money, and investors purchase these shares with the expectation of earning a return on their investment. When buying shares, investors effectively own a small portion of the company and can vote on certain issues and attend shareholder meetings. The commodities market is the place where raw materials instead of manufactured goods are traded. They are divided into three main sectors. Agricultural commodities. These include grains, food and fiber like corn, soybeans and cotton, but also livestock and meat like cattle. Energy commodities, crude oil, Brent oil, ethanol, natural gas, and propane. Metal commodities, industrial metals like copper, lead, and zinc, and of course precious metals like gold and silver. The bond or fixed income market is the place where investors buy and sell debt instruments such as bonds, treasury bills, and notes. These investment vehicles allow governments, corporations, or municipalities to raise funds by borrowing money from investors. In return, the borrower pays a fixed rate of interest at predetermined intervals and returns the principal amount at the bond's maturity date. The bond market is essential for the economic development of countries, as it provides a reliable source of financing for capital projects and operations that cannot be funded solely through equity financing. Investors in the bond market are offered a predictable income stream, which is deemed less risky than investing in the equity market. The derivatives market is the place where investors trade financial assets that derive their value from underlying assets, such as commodities, currencies, stocks, and bonds. Derivatives are contracts between two parties that agree to buy, sell an underlying asset at a future date, predetermined price, and quantity. This market enables investors to reduce their risk exposure, hedge positions, or speculate on future market trends. There are several types of derivatives, with the most common being futures, options, and contracts for differences, CFD. Futures: a standardized contract to buy or sell an asset at a predetermined price at a specified date in the future. Options: a contract that gives the holder the right to buy, call option, or sell, put option, a security at a specified price. Contract for difference, CFD: a derivative contract used as a speculative tool against changes in the value of an underlying asset. Dear traders, the episode comes to an end. I hope you have enjoyed the video and anticipate seeing you in the next one. If you have any questions, are unclear about something, or would like to know more, feel free to leave a comment below. Thank you for your attention, wishing you successful trading, and see you soon.